Hello, it's Chris Hynes from Wealthi. I hope you're all doing well. Today I just wanted to run through a quick, you could say, wrap up of the 2021 property year. It's been quite an eventful year. There's been a lot of movement in the market. We're seeing a lot of new trends developing in the UK real estate market. So I wanted to run through and give you a bit of a breakdown as to what we've seen this year, the price growth that we've seen and experienced over the past 12 months and also going back 18 months, and then also looking at the rental market and looking at the demand for rentals now has skyrocketed. Rental increases are at record highs as well. So we'll run through a couple of these points in this short presentation today. I'll keep it nice and brief, nice and concise, and hopefully answer a few questions that may be playing on your mind at the moment. And if you do have any other questions, please feel free to leave your comments in the comments section below. Give me a call, reach out to me on LinkedIn, or click the book now link in the description below, and I'll get in contact with each and every one of you. But we'll get stuck into it and we'll get started. So to start off with, I thought we'd run over a quick overview of prices. So in terms of a sales market and what we've seen in the sales world, we've experienced price growth of 10.8% across the country. Now, that's incredible considering that the normal price growth, when you look at the long-term average, of the UK's property market, that's increased at about 7.9%. So seeing a 10.8% price growth over the last 12 months, given the circumstances, is some incredibly strong growth. Now, looking at the rental market as well, the rental market is really out of control at the moment. You may have heard me mention it in a couple of my podcasts at the moment, but I'm looking at finding a new rental in London at the moment, and properties are lasting on the market anywhere from 3 to 7 days at the moment. It's almost impossible to get yourself an inspection depending on where you're looking, but we're really having some difficulty in doing so. Now, in terms of rental values, we've seen an increase of 8.7% across all property types across the UK. Now, that does vary depending. However, providing an average for the country, you're looking at an 8.7% increase across the country. So some very, very strong growth in that rental market. And that's been driven by the amount of demand that we're seeing at the moment. And of course, the lack of available stock. We are seeing a shortfall in supply at the moment, which is really helping drive the demand for some of these properties from a rental perspective, but also from a house buying perspective as well. Now, looking at your buyer's demand, that's up 30% on a 5-year average. If you look at charts and statistics from previous years, that generally sits around the 5 to 10% mark. So that's seen some incredible growth there and a lot of pent-up demand, you could say, that we have experienced. Now, when we're looking at the demographics and who's looking at moving and how many more people are considering a move, there's a 22% current demand for people wanting to move. Normally, in a normal market, you're looking at about a 5% average of people wanting to relocate, upgrade their house, move to a larger property, and at the moment that number is sitting around the 22% mark, and we really just don't have enough properties in the UK to accommodate for all the demand really at the moment. So we're really lacking in that supply, but of course that's creating a very competitive property market. It's driving property prices up. We're seeing record highs. If you look at this last point here as well, and so far, this is to the start of October 2021 when the stats were published, but there's been 1.5 million house transactions in the 12 months to October 2021 from October 2020, and generally you're looking at about a 1.2 million, you're generally looking at about 1.2 million transactions in a calendar year. So it's a massive amount of people that are currently transacting on houses, moving houses, or moving back to the city for that matter as well. But there's a lot of activity there has been a lot of activity in the market over the past 12 months. Now, digging a bit deeper into the rental forecast. So rents have hit a 13-year high. As I mentioned, the rental market has become incredibly competitive. Demand from renters is up 43% on a 5-year average. Another thing worth noting as well, and something that I found quite interesting, was the fact that about 19.8%, or so just under 20% of the UK real estate market is currently privately rented, which is incredibly high when you compare it to other places around the world. And I think that there needs to be a policy or something put in place can really incentivize more people or help more people buy their first property and get their property journey started. But I'm sure we'll see more about that in the coming months as well. Now, in terms of stock, so 43% less stock is on the market in comparison to the 5-year average as well. Savills are foreseeing a 19.9% increase in rents over the next 5 years. Now, that does vary dependent on the source that you are looking at. From memory, Zoopla have predicted about a 10% rent increase over the next 5 years, but we're looking somewhere between that 10 to 20% increase over the next 5 years when it comes to rents. Now, overall rents across the UK are expected to end 2020 at a 4.5% higher rate than what they started at. So we're already starting to experience that. To give you a bit of an example, I heard back from my landlord yesterday, who has asked if we could increase our rent by 10%. Yes, I understand I'm living in London, but nonetheless, you're starting to see some very, very bullish numbers pushed around the rental market at the moment. And these landlords understand that renters don't have much of an option at the moment as well. So I think that we'll see a lot more activity in that market, but I think that we're going to see some very strong growth as we go into 2022 as well, especially given that borders are now gradually reopening. We're seeing more and more international students return to the UK, and there's more activity. The businesses are almost back to running at full steam again, and there's a couple points as to why that I'll point out after this slide, but I think that we're going to see some very strong price growth and rental increases, over the next 12 months as well. Now, the next question is, will the market settle down? Now, I think that's quite an interesting question in the grand scheme of things. I think that there's been a lot that we've seen and learned over the last 12 months that should help us over the next 12 months as well. If we look at stamp duty, for example, we had the stamp duty holiday, which ran until October of 2021. And that really created, you could say, a buying frenzy in the market. It helped keep the market running and kept the number of transactions up. Then once October came around and we moved into November, you had solicitors that were prioritising work and settlements that were due to be completed in the month of October so that they could make the stamp duty holiday deadline. So that took place, and we were expecting, once the end of stamp duty happened, that we'd see a slowdown in the number of buyers. Now, we did not see that. It didn't dampen the number of transactions a great deal, and it goes to show that there's still a lot of activity in the market. A lot of people have, or there's this pent-up demand, you could say, which is driving people to want to get into the market even more. Now, as we don't have enough supply and we've got all this demand, obviously that's causing, you could say, this frenzy that we are seeing at the moment. We're seeing price growth is increasing at dramatic rates. We're seeing rent increase at dramatic rates as well. And I think that stamp duty has a part to play in that as well. Then we've got to look at things like B-bills. Now, B-bills were government grants that were given to businesses in the UK during the pandemic, and essentially a loan that you got from the government to help your business stay afloat, in essence. And let's say you took a £500,000 loan from the government, you're then going to repay that back over the next 10 years at extremely low interest rates, next to no interest rates, really. But the government pumped out all this money to these small businesses, all these businesses as a whole, to help keep the market moving. Then you had furlough, and furlough was a government, as many of us know, but a government scheme which helped employers pay their staff, and that really did keep the economy moving. As we look at some of the employment rates that we've seen over the globe over the last 12 months, or 18 months for that matter, and we've seen some dramatic rises in some countries around the world. When we look at England, our unemployment rate prior to the pandemic sat around 4.2%. It's now sitting around 4.7, 4.8%. But in the grand scheme of it, given that a population of 68 million people, it is not as bad as it could be. So that was a great initiative to really help keep the market and the economy running. Now, the downside of all of these points is the fact that we have now managed to accumulate a £300 billion debt, which equates to 14% of the UK's GDP. So a massive, massive amount of money is now owed. Now, they're not going to let that slide under the carpet. The government's going to want to recoup some of this money, as they always do and as expected. So what is predicted and what's expected to be seen probably starting next year, and we'll know more about this come the start of next year, but it's believed that we'll see tax increases, and it'll probably be around it'll probably represent about £3,000 in additional tax paid per household across the country. Now, what's that going to do to the property market, and what part will that play? And it's hard to tell at this rate. Obviously, with raising taxes, we're going to be taxed more on our incomes, which means our real income will be less than what we would be generally expected. Now, when we've got less money coming into our bank accounts, we're less likely to go and spend as well. So you might see a slowdown in the property market due to people not having the amount of funds that they would have prior. It's hard to know at this rate, but we might see some correlation there. Now, another point worth noting out as well is the fact that over the past 18 months, homeowners in the UK have managed to accumulate a massive amount of equity in their properties as well. And obviously, we've seen very strong price growth this year. It's around 10.5 or 10.8%. And the year before that, it's at around 6% as well. So I think that we will continue to see high numbers of activity within the property market. There's this equity sitting there from a lot of these properties across the country, people looking to reinvest their money, buy an investment property, buy a holiday home, whatever it may be, upgrade for that matter. But we are definitely going to see some more growth I expect that to drive some more growth over the next 12 months as well. Now, what are the headwinds for 2022? Of course, we've got the lack of availability, so that puts off potential sellers. If you don't have anywhere to move to and there's not enough stock there or something that you really want to move to, well, there's no reason for that seller to sell their property. Sellers' expectations may be slightly unrealistic or slightly twisted, you could say. Obviously, we've seen strong price growth this year. There probably a lot of homeowners might be sitting there thinking that they're going to be getting some extortionate rates or numbers on their property as well. But I think we've also got to be cautious about where your property is located. Let's just, for example, say you're a homeowner in London. London saw about 2.7% price growth over the last 12 months. Compare that to somewhere like Liverpool that saw 10.8% price growth. It really just depends on where your property is located. And if you're in London, don't expect to get an additional 10% on top of your property price if you bought it last year. But if you're up in Liverpool, then maybe that is realistic. But we have to remain realistic as well. Now, we've got inflation as well. That's currently sitting at around 4.2%, and it's raising the cost of living. So that's another thing that we've got to be wary of and cautious of. As I mentioned, we are going to see potentially additional taxes for people in the UK so that we can repay some of this debt that we owe to the government. So that's also not going to help when it comes to the cost of living. Now, in terms of mortgage rates at the moment are at incredibly low interest rates, which is a great thing for property owners, a great thing for people who are trying to get a mortgage at the moment as well. But I think that we're going to see some increases in mortgage rates or interest rates as we head into the start of next year as well. I don't think they'll be incredibly dramatic, and I don't think they'll have an incredibly massive part to play from an investment perspective. But of course, it's something to be aware of, keep in mind. But I think nonetheless, we're going to have some very competitive interest rates at the end of the day. So they're a few of the headwinds that we've got to be wary of as we head into 2022. And now a bit of an outlook as to what I think we'll see. So 2022 will present some new and serious economic challenges, which should begin to reduce the current rapid rate of growth. However, given the strength in demand in both the rental and house buying market, and given the shortfall in supply, value should continue in a positive direction. This will be felt more in the more affordable areas of the UK. I don't think we'll see as much price growth in places like London next year. That'll probably sit around the 1% mark. I think that as a whole, and given the sources and the stats that I've been looking at, let's take Zoopla, for example, and Zoopla are predicting price growth of about 3% next year. If you look at the Knight Frank report, that's sitting at about 4% price growth. And if you were to look at, let's say, Stratton Parker's overview of their forecast for next year as well, they've predicted higher price growth than that, and they're predicting about 7% price growth, 6.5% price growth over the next 12 months as well. So I think, being conservative, you could say that we'll see price growth sitting around that 3 to 4%. Now, inflation could well erode the real value of total investment returns next year, but a combination of strong capital growth and healthy rental yields should result in impressive net gains overall. So I hope that's given you a bit of an overview as to what we've seen in the UK over the past 12 months, what we're predicting, or what I'm expecting to see as we head into 2022. As always, if you've got any questions, please feel free to reach out to me. More than happy to have a chat with each and every one of you. I'd love to have a chat with each and every one of you. In fact, and if you've got any questions, please flick them through in whichever medium is easiest for you. And I look forward to hearing from you all very soon. Have a fantastic week. Thank you.